Symposium Keynote interview series in advance of the Gold Symposium taking place in October in Sydney. I'm here today with Principal Founder of Noah's Rule, Sean Russo. Now Sean, you're going to be speaking at the Gold Investment Symposium about the money or the tons. Now I'm assuming that part of that title is an impact on how we choose what gold companies to invest in and what to look for when investing in some of these gold companies.
Absolutely, Kerry. The money or the tons was really, I guess, trying to reflect what I've seen as a delightful change in the way gold producers are starting to behave, but perhaps a little bit too slow, that I saw for most of the last decade. They seemed to think that investors were fascinated by how much gold they produced. Almost whether or not they made money was irrelevant. You know, if you think back 4 or 5 years ago, paying a dividend was almost an anathema to gold producers. It was, you know, the gold price is going up, we produce lots of gold, we give you leverage to the gold price. Unfortunately, that attitude led them to let their costs run up, in many cases almost as fast as the gold price. So even though the gold price rallied $500 or $600, in some cases companies' share prices today are lower than they were back then because they're actually making less money. So what I believe is important for investors, and certainly what I look at in the kind of clients that we're looking to work with, are the people who actually say, I'm in the business of making money.
Right.
The way that I make money is through the exploration and the development and the production of gold. Maybe not even an explorer, maybe they're just a gold producer. But the idea that, you know, that's the way they chose to make money, but it is about making money. And so that they don't believe they'll simply be rewarded for producing 1 million ounces of gold a year and get into some new category of gold producer.
And possibly get taken over.
And possibly get taken over or be relevant to someone else, when I'm just as happy to be a shareholder in a company producing 60 or 80,000 ounces of gold, making really good money every year, and I can see how they're going to continue to make money for some time in the future, because I don't know when the gold price will next be as exciting as it was in 2010 and 2011. I believe there's every chance that it can be like that again, so I want to be involved in a company that I think is going to have longevity. So it has an asset that will last, but also as a business that I can see if they're making money, they'll still be here in 3, 4, 5 years' time. We may only need 1 year or 6 months of fantastic gold prices to get the kind of share prices that really reward investors. But in the meantime, a company that's making money can sustain itself and is simply more likely to survive in what are very volatile markets.
So really what you're saying is it doesn't matter whether you're a gold mining company or a widget company, it is about running a business which is profitable at the end of the day, whether you're mining gold or nickel or whatever.
Absolutely. The difference is there aren't a category of people known as widget bugs.
Yeah.
So widget companies don't tend to have these people that just simply believe the world's all going to end tomorrow and that gold is the only true money, and a lot of those other arguments, the kind of hard money people will go. So gold producers have kind of benefited from always having those people out there somewhere in the way a widget manufacturer hasn't.
Right.
But the reality is that for most of them, I've been 30 years in the gold business, you know, it's a long time, often it's a long time between drinks.
Yeah.
And as a gold investor, you can either choose to leave the sector and not come back, and come back again when it looks interesting, or if you want to stay in that sector because you're not sure when the right time is to come back, you want to stay with companies that you think are going to have the capacity to continue to make money, in good or bad, to survive.
Yeah. Well, you mentioned before that some of the gold price could go up, could go down. Gold equities have been smashed, there's no doubt about it. Do you think that the gold mining companies, their share prices have been oversold? Do you think now is a good time to get into some of these, so long as the fundamentals are there and they have a good asset? Do you think now is a good time to be looking at the gold companies?
Yeah, I think it's probably the best time to be looking at gold companies for quite a long time. If you look just purely in terms of, you know, the kind of value that's there, what will be the drivers to turn that round? You know, I'm not sure, but yes, certainly I see in some of the companies that we deal with you know, established mines, you know, have their financing under control, good people, you know, the opportunities for them seem to be now in my way, to be better. You know, there's that expression, all boats float with the tide. I think a couple of years ago that was certainly true. At a high gold price, almost anyone could raise money or get the finance to build a mine. Now we'll start to sort of sort the wheat from the chaff, and I think within what's left there are some very good opportunities.
What are you going to be talking to the investors about at the Gold Investment Symposium? And I know it's the money or the tons, but What can people expect to learn from your keynote presentation at Gold?
Well, I would hope if they take away nothing else, would be that don't be fearful of companies that talk about hedging. Don't be fearful of or avoid companies that actually take an active position in trying to manage their business and to sustain profitability. I think what the last 6 months or 8 months has shown us is that those companies that perhaps gear, take on debt without hedging, are highly exposed to the gold price falling. In fact, they're more geared to the gold price falling than they are to the gold price rallying. So they actually have by virtue of their operating margins, their debt obligations, their share price will fall faster on a $100 move than it will go up. People have traditionally bought gold shares wanting to get that gearing that for every $100 that goes up, you make more money owning a gold share than a gold mining company.
Absolutely.
Companies with debt and no revenue certainty actually provide the reverse of that. That's been a lesson I think investors have learned. Equally, I think to look and just say, hedging, so come back to your original question, so don't be afraid of hedging. Don't necessarily fall for people who start predicting and say, we think the gold price is going down, therefore we hedge. That's not a good reason to hedge. I'm looking for the CEO that says, I have no idea where the gold price is going, but what I know is I want that shareholders still to have a viable, existing shareholders to have a viable stake in this business 2 or 3 years from now. So we've taken measures to hedge our risk to a sensible level, to secure the income and to make sure that we can continue to develop our 5 to 10 year plan and still be here but to do that we still have to be here in 1 to 2 years' time.
I think that's a good comment, but I'm sitting in this audience and I really don't understand too much about what to invest in or what not to. I don't understand hedging. I'm just a simple person that loves gold, but I don't really understand investing in mining. I understand about buying bullion, for example, but I don't understand about investing in a mining company. Do you think during your talk you're going to unravel some of the mysteries, I guess, or is it pretty simple when you look at investing in a gold mining company? Do we overcomplicate it?
I'll come back to the title, the money or the tons. I think that investors, particularly the average size investor, someone for whom the liquidity of the market is not an issue. If you're Warren Buffett, you want to get exposed to gold mining stocks, maybe you've got a limited number of stocks you can invest in. But the average investor, we're spoiled for choice. There's an enormous number of companies out there in Australia and around the world that are producing. My very simple analysis was, the first would be, I'm really not interested in investing in this current market in a mining company that isn't making money. If they're actually in their mining gold going to it's a very hard business, it's a very tough business, there are lots of risks. If I can't see that every year they're generating cash in that business and be willing potentially to give some of that cash back to me by way of a dividend or reinvesting that cash in growth, then I'm quite suspicious. I think that it's too often the gold mining companies, it's jam tomorrow. We're not making any money today, but it'll all be okay because the gold price is going to go up. Right. I come back to my sort of original thing. Any CEO that tells me, don't worry, whatever the other concerns you have is a higher gold price will take care of that, I'm immediately suspicious. Okay. The most dangerous person in the room is the person who actually thinks they know where the gold price is going to be next week, next month, next year. I believe it's a good business to be in. You can make a lot of money. I saw a lot of people get very, very rich in the late 80s through the 90s in a falling gold price environment. You actually don't need to have a rising gold price to make good money being a gold miner. If you can buy assets more cheaply, you can build projects more cheaply, you can hire people in a more sensible wage environment and produce gold for less than you sell it for, then it can be a very good business to be in. One of the lovely things is there's always a sale price for gold. Whether it's a high price or a low price, the one thing you can be assured of, you're going to build a gold mine and it's going to take you 3 years. In 3 years' time, I know as much gold as you can produce, you will be able to sell. That may not be the same for strategic minerals or rare earths or other things. There may not be an appetite for them, they may not be the same. But with gold, it's always been around, it always will be. So in that sense, and it's the simplest thing to sell. You know, I mean, you don't have to deal with, you know, in most cases with concentrates, with large boats, with smelters overseas.
Yeah.
You know, the
Fit it in
armoured
a
car
briefcase.
takes your doré bar, or you take it in a briefcase on a helicopter to the nearest refinery.
Yep.
I mean, in the middle of Mongolia, for example, if I was going to help invest someone that was building the idea of producing coal in the middle of Mongolia as opposed to the logistics of producing gold, you know, gold wins hands down.
Well, I think that's a very good entree to what we're going to be hearing from you in October. Sean Russo from Noah's Rule, thank you very much for joining us today.
Thanks, Kerry.